and welcome back to A Wealthy Life, the podcast for property investors, everyday change makers, and people who want to build a clear financial, secure, and empowered future. I'm your host, Vicky Wishay, and today we're going deep into the UK property market. This is useful information for everybody, whether you are an investor at the moment, whether you already own 1, 5, or maybe more. So maybe you've been wondering, what do I do now? Should I buy more properties? Should I sell what I've got? Should I just get out? Or maybe I should do nothing and hope it all settles down. Everybody's talking about a market crash, the Renters' Rights Reform Bill, and of course, many other crises, or whatever the plural of crisis is. Well, let me tell you one thing for sure. Doing nothing is absolutely not a plan. So, because you've been listening to the news, or maybe just even watching your mortgage renewal rate, some of you will have been coming out of a pre-trust low rate, and even though it's quite a nice average stroke normal rate at the moment, you'll start to know that things have shifted. And the property world we are playing in is very different to the property world of 3 and 5 years ago. 5 years ago, we were just going into or just gone into our first lockdown. And 3 years ago, we were just sort of finally coming out of the lockdown series, just to sort of like put your head in that space, how different life was back then. The thing is that even though you can see and feel that something's changed, that doesn't mean to say you need to panic. It means you need to pivot. And I'm going to walk you through exactly how to do that, what to be thinking, what to be asking yourself, so that you can stay in control of both your cash flow, your portfolio, your equity, and of course, your long-term goals, why you got investing in property in the first place. So what is actually going on right now? Well, if you listen to what I was saying last week, you'll know some of this already. And quite frankly, unless you've been in a coma for the last 3 months, you'll have an idea. But let's just set the scene of what's been going on. So we started, as I mentioned, with a global pandemic and a cost of living crisis. We've had inflation spikes. We've got interest rates going up and down, left, right, and center. And now with Trump back in the White House, a combination of trade wars and tariffs that are really knocking the global stock market, which is making the global stock market something more tricky to invest in at the moment. And you know what happens? When the stock market falls, the property market goes up. Just going to leave that out there for you. But all of that, no matter what is going on, it all leads into property one way or another. Whether the lenders start to tighten up or not, we've got energy standards changing, everybody needing to increase their energy standards, EPC ratings. We've got the forthcoming Renters Reform Bill still on the table. And you might have noticed the costs of your refurbs climbing. But most importantly, your tenants are probably going to be feeling the pinch too. So if you're feeling a little uncertain, then you're not alone. A lot of people are concerned. This is a period of rebalancing. And what matters now is how you respond now. Not after you've lost money, not after tenants have moved out, now. I did a podcast number 134 called The 3 Stages of Successful Property Investment. And I talked about the different type of thinking that you need at different stages of your business. Sometimes you trigger the change in thinking by wanting different outcomes from your portfolio. Other times your life events take over, whether that's divorce or a new relationship. Now it's economics that are playing a part. And in my opinion, what they've triggered is a consolidation phase. This is really a 4-step process that you can go through. But the consolidation is all about, it's so hard not to keep using property metaphors for this. So I'm very sorry if they're all over the place, but you sort of really need to cement your portfolio and make sure that it's got solid foundations. I will try and stop, I promise. But basically, this is a time to review your portfolio, to confirm that your strategies are still appropriate in the current climate, that there's still a demand for them, and that they still make sense financially. And you need to get into the nitty gritty and look at the individual performance of your individual properties. And then check your entire portfolio against your overall goals. I'm currently helping my private mentees and sourcing clients go through this very process. And we go through this process regularly. We trigger a consolidation thinking phase all the time in our portfolios as we go through. So effectively, we are packing down and making sure that the layer we are on is solid before we build the next layer of our portfolio. See, I resisted saying floors, didn't I? Oh no, then I threw it in there anyway. Okay, so look, let's do this mini review now. Let's have a think through what you should be considering in your portfolio, in your property business. So let's start out with rebalancing the portfolio. One of the best outcomes from the consolidation phase is that opportunity to, I can't think of another word for it, but rebalance your portfolio to make it stronger, to make sure that each individual little house, little brick bank is performing as it should. Maybe you've got a couple of tired assets, properties that aren't performing as they used to, or properties that need a solid refurb and have just become empty. You could consider, is now the time to refurb them up to go out onto the residential market? Or is it simply a case of they've been rented out for a while and you're going to refurb them and keep them in your portfolio because they are good performers? So you need to think about each property. Should you sell it? Should you reinvest that money into a higher area? Could you convert it? Could you reconfigure it? Should you be refurbing it so that it attracts a different market? In a sense, this is portfolio hygiene, and that's crucial when the market is potentially volatile. Now, I'm not one for talking about a property crash. I don't think that's true. We need far too many properties in this country for the prices to be crashing. I will stand in opposition to everybody who's saying that there is a property market crash, and let's see. But what I would say to you is there is no room for weakness or sentimentality here. Whether you go through a property hygiene phase or a property consolidation phase, whatever you do, you need to be looking at your portfolio house by house, brick by brick, tenant by tenant, and deciding who still fits your portfolio overall strategy and goal, and who is the weak link that you need to remove, and reinvest that money so that it makes more money for you. Because point number 2 is about professionalism. And no matter what you say, if you are professional, you are more likely to win. There are so many amateurs leaving the game. They are the accidental landlord where they've been left a property or started a new relationship and still got one behind. They've not taken part in the education that they should. They're scared by the changes that are coming through the Renters Reform Bill. That's fine. We don't want amateurs in our business, in our market. It's okay for them to leave, because that also opens the door for you to step in, because you've got systems, you understand compliance, you know how to build tenant relationships, and you've got a real strategy to make this work. And if you haven't got those things in place, then definitely book a call and I'll help you. The landlords who are going to thrive over the next 5 years are the ones that run property like a business, not a hobby. Now, I've been talking about property being a business since early 2015. So after 10 years, if you haven't got the message yet, you definitely need to book a call. And I'd love to speak to you to talk through how I help my mentees and my clients ensure both the profitability and the longevity of their portfolios. Because as any professional landlord knows, we are in this for the long term. That is how you make your profit. That is how you create a relatively hands-free cash flowing machine with time. I've mentioned the renters reform, and with that is going to come eco upgrades. Quite frankly, you should all be at a C rating anyway, because energy performance is no longer an option morally, for climate change, for your tenants, and really as a good product. If your goal is to be a professional landlord and offer a good product or service to market, then you need to be an EPC or above, EPC C or above. So if you plan and budget right, you could go through your portfolio one by one, increasing your energy performance, and with that, quite probably the property portfolio value all in one go. Tenants are becoming much more energy conscious these days. And so that combination of potentially higher rental income, greater tenant stickability, and potentially better mortgage rates just says that eco is the way to go. Now, it doesn't have to be some sort of specially engineered hoof house or even a heat source pump. Keep it simple. Hit C. You can hit C with good insulation, thermostats, and appropriate light bulbs. And then look at the second option of considering the pros and cons of solar panels for your particular houses in your portfolio. It won't work for everybody. But if you could imagine that you could put solar panels on your properties and enable your tenants to have free electricity, or potentially even if we get a good summer, free gas and electricity for 60, 70% of the year, that's got to be a selling point. And that's going to help with tenant retention, which is really the fourth thing that we need to look about. So if you're going to be professional, you're making sure that each individual house is performing to its best, you've upgraded the EPC, then it almost says that your tenants are going to stay anyway. Because a reliable, happy tenant who pays on time is absolute gold, and you want to keep them. So don't cut corners. Do your repairs as soon as they come in. Build relationships with your tenants. Explain to them and encourage them to see this as a two-way relationship, a two-way contract. Your commitment is to keep the property tidy, to keep paying the mortgage, to handle the repairs, which takes a lot of stress off of them. And in return, their responsibility is to pay on time and keep the property clean. A loyal tenant can save you thousands in voids, remarketing, and of course, stress. And I think that we can reverse the bad name that landlords have that are being brought about by a few miscreants just treating people badly. That's not who we are. And I doubt that anybody like that is listening to my podcast, because they're out there stuffing people in their garages at the end of their garden. So let's not be those people. We can professionalize and offer a decent service to decent people who deserve decent homes. And let's not forget, along with all of this that's going on, things that you can do to your existing portfolio, there are opportunities in 2025, very real opportunities in the market right now. All you've got to do is look. And the key here is, and I'll call them a distressed seller, but essentially somebody who needs to sell. Maybe due to divorce, to debt, to downsizing, maybe they're consolidating and realize they need to let a property go. It doesn't work for them, but it might work for you. Or with all the changes that are going on, there's a lot of people listening to the negative social media hype that's out there, and that's a hard word, and the disillusionment with property investment is growing. That's just an opportunity for the professional landlord to come along and buy a property that is going to make great cash flow for us for the long term. So if you've either got capital or borrowing power, it's a prime moment to start negotiating those favourable terms. I've currently acquired a portfolio from a landlord, recently divorced, and I now have 4 happy clients and myself all adding stock to our property businesses at a splendid 8 to 9% return. And that's when everybody is saying that mortgage rates are high. They're not high, they're normal. And it's quite possible to get 8 to 9% net returns on your money invested. Now, haven't talked about all the good things about property investing. Of course, we've got to consider and be honest about the risks. But remember, a risk isn't a reason to panic or to not invest. It's a opportunity for you to understand what's going on in your business and to create a plan to mitigate the risk. So I suppose the biggest concern, and you're going to see that this is interesting that I've put this above the Renters Reform Act, but is tenants struggling to pay. Because the potential is, with increasing costs just in the supermarket, that affordability could become a real issue for some of your tenants. I would imagine some of your tenants could be working 2 jobs. Are you aware of that? They might still be coming up short. And what I would say here is now's not a time to be greedy on the rental increases. I always negotiate my rental increases because I'd rather keep a good tenant than get an extra 10, 20, 50 pounds a month. It's going to cost me a lot more to refurb the property, remarket, have the void, and get another tenant in place who may not be as good as the one I had for the sake of an extra 50 quid, even 100 quid. It's that game. How much money would you need to increase the rent before it's not worth that tenant staying? Or when that tenant leaves, how much would you have had to increase the rent to cover the costs in the space of a year? So I was just put my rent up 10% every year. That's above inflation. It's in keeping with the increased costs that I'm experiencing. I'm moving my profit up slowly while enabling my tenants to still live in the home that they care about, that is appropriate for them, that's near their business, their family, their friends, and their children's school. So what I would say to you is be proactive. Carry out a rent review of all of your portfolio. Be aware of what's going on in the market. And if you've missed the boat and you've not been putting your rents up on a regular basis, don't suddenly think that you can jump from 595 to 895. Now you just need to get into the rhythm of putting your rent up by 10% every year, and you've learned a lesson from taking your eye off the ball. What you can also do is look at tenant support schemes for any tenants that are struggling. Make sure you're aware of what's going on in your local area. Quite frankly, if you've got a good letting agent, they should be doing this for you and with you. I would suggest that in a time when tenants could be struggling, that focusing on the long-term viability of your portfolio over short-term profit is the way to go. Once things stable out again and the market's busy and moving, then fine. Put your rates up a bit higher if you want. But I would never, having been a social housing tenant myself, ever kick a family out just to make a little bit more profit. And my portfolio works fine. So let's come to point 2, which is the changes both to EPC rules, as I've already mentioned, and the Renters Reform Bill. So regulation is increasing. That's not news, is it? We've had this from Section 24, even before that, the introduction of regulation around HMO licensing. I think the key thing here is don't wait for a last minute panic. If your portfolio, as I've mentioned before, isn't up to standard in terms of the EPCs, get your quotes in now, build in and budget for the upgrades. Spread it out over 12 to 24 months across your portfolio. This is business maintenance. And I started giving talks about how we should be increasing our properties up to a C the last time EPC ratings were on the table. If you wait too long, you may find traders are hard to come by and prices will go up. There will be other changes in the Renters Reform Bill, and let's worry about them when they come forward. If you're running a professional business with qualified tenants that you know are good, that have been performing up until now and not causing you any problems, there is no need to panic. I think I've only in 20 years would I say evicted, asked to leave two tenants. And we definitely helped one of those, Dirty Jennifer. She just wasn't coping, and we got social services involved. And Naughty Nicola, her child broke her arm playing in the garden, and she tried to sue me to say that the kid fell off the kitchen counter and it was my fault that her child broke their arm. So we got medical reports and then spoke to her guarantor and asked her to move on. And yes, I have had some tenants in the early days leave without giving notice, but that's something that I have now created a system for, and that does not happen. So we've looked at our portfolio, and I have looked at all of the properties owned by all my clients, several hundred properties now, and only one needed to be asked to go in preparation for the Renters Reform Bill. They weren't happy in the property anyway. They were always complaining, and we decided it was time to not renew their AST. We will be getting in a brand new tenant. And yes, you might think, well, hold on a second, aren't you going to have to pay for the refurb? But it's better to do it now and get in a new tenant that's going to be happy to stay in a home that they are happy to have. So review your portfolio, not just for its financial performance, but let's say the tenant relationship as well. And of course, void periods. If you've ever had an empty property for weeks, maybe even months, you'll know how quickly it starts to hurt. So you need to be tighter on your marketing. Maybe look at the relationship you have with the letting agent. It's an opportunity for you to improve your onboarding process. Maybe you need to consider new target groups of tenants. Is it key workers? Maybe now's the time to look at benefit supported tenants. Personally, I love a family. Once the children are in school, most families will stay in my property for years and years. And I work very closely with my letting agent. And while I'm saying to you that an empty property could cost you money, I'm prepared to have an empty property in order to get the right tenant with the right referencing in place. So, really, you should be prepared for void periods in your portfolio. And no, we don't want to be giving away money. No, we don't want to waste the profit. But equally, I don't want to be contracting with a problem with the changes that are coming. So, we take our time to ensure that our vetting is precise. So there's that balance between making sure that you've got the marketing, the systems in place, and your tenant onboarding is professional and precise, but at the same time, not being lackadaisical about it and leaving a property empty for months and months. And I think one of the other things we need to talk about here is the financials, if you like. That if you are highly leveraged, this could be because you're early in your property portfolio business or because you've been following one of those RRRRR strategies, which I have never advocated, then you could be in a position where your rent is tight and you're walking a tightrope. What do I mean here? There are lots of people out there that say the way to grow your portfolio is to, buy, rent, no, buy, refurbish, remortgage, and rent, BRRR. Now, the problem with that is that if you are going to pull out all of the equity right at the beginning, you're going to have a larger mortgage. And yes, the amount you can borrow is very, very precisely controlled by the lenders, making sure that they have their mortgage coverage. You could still be in a position where your rent at the end of the period is what, maybe 100 or 200 pounds a month. That's not enough. That's not enough per property. That doesn't cover a boiler. I have set limits in terms of the return on my investment, because if the money I'm going to put in or that my clients are going to put into a property isn't giving a high enough return, and I mentioned we're getting 8 or 9% at the moment, is it really worth investing in property if we could put our money somewhere else and get a better rate of return on it? But not only am I looking for the return on investment, I'm also looking for that profitability to make sure there is that serious margin between the rent coming in and the mortgage going out and leaving me with the profit in the middle. So, what could you do if your rent is barely covering the mortgages on one or more of your portfolio? Well, it's got to start with a review of your finances. Is there a way that you could reduce borrowing? I know that I've spoken to people over the years that have got themselves in difficult positions where they have over leveraged on their portfolio, had all of their borrowing with one lender. They've maybe then decided to give up work and they're now in a position where they can't remortgage and they can't remortgage quickly enough. So maybe you could refinance. Maybe you're going to struggle to refinance. In which case, you need to think about when the next property comes up for remortgage, is now the time to sell it and then to use that money to pay down some of those mortgages that you currently have, to overpay in order to sort of bring down that loan to value ratio. Maybe there isn't enough money to overpay the mortgages, but that money could sit in your property account and be there to give you the security to know that you can cover the cost of a boiler if that comes up for renewal. This isn't about shrinking your portfolio. It's not about selling off. It's about strategic sustainability, that consolidation that I spoke about, in order to put us in a position where you are stronger moving forward. You're not going to like this next sentence, but consolidation is the way that molecules in coal are turned into diamonds. Now, actually, it's pressure, so that's not scientifically accurate, but I was trying to think of a metaphor, and that was the best that I could come up with. That consolidating your portfolio will take those chunks of coal and turn them into cash rich diamonds for you, but it takes time. And of course, anything that takes time is going to be plagued by decision fatigue, maybe even denial. And the worst place for you to be right now is frozen. I've seen landlords ignore the numbers because they don't want to deal with it. And that is literally the death of your portfolio. I would encourage you, please, to block out some time, sit with your spreadsheet, or if you don't want to do that, start your spreadsheet and then book a call with me. You don't have to figure this out alone. We can do this together. So let me bring this all together for you and say, the market isn't easy, but the market is never easy, but it's also not impossible. I have not stopped buying in 20 years, but at the same time, I have sold some of the properties, potentially the ones that I bought earlier, in order to make more money from that money invested into new properties in new areas at better rates. In fact, some of the best opportunities that come in property come when the market is a mess, because it scares off the amateurs, it scares off the newbies. And if you have a clear strategy, we can survive. We've survived HMO legislation, we survived Section 24, trusts, and the pandemic. We are a business built to survive because we are offering a vital service to the British population, one that successive governments have failed to do. So this is what I want you to walk away with. 3 takeaways to add some more whoosh to your life. Number 1, property still works, but only if you treat it like a business. Number 2, now is the time to review, assess, and replan your portfolio. It's the chance for you to consolidate and to get a stronger foundation on which to then move forward. And number 3, the hardest one of all, I think, you don't have to go it alone. Whether you're looking to expand, to exit, or to optimize on the opportunities that are out there, let's get a strategy for you that is for this new era of investing. So book a personalized property review call with me. You'll see the link in the show notes, and I'll help you identify those blind spots, maybe even hold you accountable and help you find opportunities. And we can put together a plan that suits you in this economic climate. Because at the end of this, property should work for you, not the other way around. Property should be the way that you are leveraging your time, your money, and your knowledge so that you don't have to work harder. I don't have to work hard. I have the systems and the team in place. It is possible to do it. Right. So that's it for today. Thank you as always for listening. Please, of course, subscribe and hopefully give me 5 stars. And if you found this episode helpful, why not share it with a fellow landlord, someone that you've met, someone you know through networking? I really appreciate you being here, and I would love to get to reach out to more landlords and help them if I can. So until next time, stay smart, stay strategic, and continue building your wealthy life. My name's Vicky Wishay, and this is a Wealthy Life podcast. I'll speak to you next week.